There was a time when traders believed the market offered unlimited chaos, that one needed to constantly chase every ripple and tick to find success. I once believed it myself. Youthful, impatient, and eager, I lived on the smallest fluctuations, convinced fortune waited behind the next flicker of price. But experience has a way of sanding down illusions, and nothing teaches faster than the market's steady habit of punishing a man who spreads himself too thin. What I learned, slowly and painfully, is that the surest money is not always found in speed. It lies in structure. And the 1-hour chart, though ignored by the impatient, has the peculiar quality of revealing the market's intentions more honestly than the frantic noise surrounding it. It stands at the midpoint between the madness of the minute bars and the slow drag of the daily time frames. It moves quickly enough to keep a trader engaged, but slow enough that each move carries weight. There is a peculiar kind of clarity that shows itself when price moves within this span. You see the impulses of the market, the thrusts, the pauses, the shallow pullbacks, yet you are cushioned from the deceptive churning that destroys so many traders on the lower time frames. It is as though the market itself slows down just enough for a disciplined man to breathe, think, and act with purpose. That is why many who study it long enough learn to trust it. They may wander to other charts for detail, but when the hours count, they return to the 1 hour for their truth. Most traders are destroyed not by a lack of skill, but by their inability to wait for a meaningful setup. They rush in because they cannot tolerate quiet. They treat the market as entertainment instead of work. The 1-hour chart does not reward that kind of temperament. It forces patience. It teaches that opportunity appears on its own schedule. Like a farmer watching the sky, you cannot make the rains come sooner by wishing. You must prepare the field and wait for the season. When I studied price long enough, I came to understand that every market movement originates first in collective intention. Crowds build positions quietly, then reveal themselves in bursts of momentum or sudden reversal. The hourly chart lays out this rhythm plainly enough for a trained eye to recognize. You see accumulation, the slow grinding that precedes a push. You see exhaustion when price rallies far too quickly with no follow-through. You see selling pressure return not as a single dramatic candle, but as a sequence each hour adding a new piece of evidence. Those who focus only on the minute charts seldom notice these transitions until it is too late. They are too absorbed in every minor pullback, too nervous to let a trade breathe. They cut winners short and let losers expand because the noise tricks them into misreading the bigger movement. The 1-hour chart, when respected, clears away much of that confusion. It shows the trend before the lower charts have the courage to declare it. I remember times when I watched the tape flicker erratically and felt the pull to plunge in. But the discipline I earned through losing taught me that waiting for structure was worth more than any spur-of-the-moment trade. When price broke through a key level on the hourly and retested cleanly, I could enter with calm conviction, not because I believed I knew the future, but because probability had finally tilted in my favor. The 1-hour chart gave me that sense of timing neither too early, when the market was still undecided, nor too late, when the move was already spent. A trader who works from the hourly chart learns another lesson most never master: letting a trade develop. Markets do not deliver profit the moment you enter. They thrash, they test you, they appear to betray you before finally revealing their direction. On the minute charts, this torment becomes unbearable. Every tick feels like danger. But the hourly view dulls the sharp edges. It reminds you that context matters more than individual bars. One strong hourly candle outweighs a dozen contradictory minute movements. With enough repetition, a man begins to internalize that the market rewards those who can sit still. When I first comprehended this, it felt as though a weight lifted from my shoulders. I no longer needed to chase. I needed only to read the flow on the hourly and position myself when the conditions aligned. The difficulty is not in understanding that idea. Any man who trades for more than a week has heard some version of it. The difficulty lies in doing it, day after day, without betraying your discipline. Because when the market slows, when opportunity is sparse, the human mind grows restless. Most traders lose their fortune not during volatility, but during boredom. They invent trades where none exist. They chip away at their account through impatience. The hourly chart, when taken seriously, eliminates much of that self-sabotage. It filters out the mediocre trades and leaves only the meaningful ones. But only if a trader respects it. If he stares at it wishing for a signal, he may hallucinate one out of greed. There is something else. The hourly chart reveals the story of momentum. Every trend breathes. It advances, rests, advances again. A novice sees a pause and imagines reversal. A seasoned trader recognizes continuation. On the smaller time frames, these breaths are hidden by volatility. One moment the market appears to collapse. The next it surges upward. But the hourly chart irons out the wrinkles. You can often see the higher lows forming or the persistent lower highs pressing down. You see the battle between buyers and sellers condensed into clearer conflict. And once that conflict resolves, you have your signal. But knowing the signal is not enough. Profits are made not by seeing an entry, but by managing what follows. The 1-hour structure allows for measured stops, logical targets, and cleaner risk. Instead of squeezing into a trade with a frantic 2-pip stop that is doomed to be hunted, the trader can give breathing room without surrendering discipline. He risks less on noise and more on the integrity of the setup. If you follow this path long enough, you begin to notice a subtle transformation within yourself. The market stops feeling like a wild beast you must chase and begins to feel like a river whose current you simply enter when the flow aligns. You learn to wait for the drift to carry you rather than splashing against the tide and exhausting yourself through effort alone. The hourly chart has another gift to offer. A man learns the power of compounding conviction. When the hourly aligns with the 4-hour and both align with the daily, the wind shifts in your favor. You feel the invisible pull of market structure beneath your feet. The trade becomes less of a gamble and more of a business decision. The odds will never be certain, nothing in speculation is, but they become favorable enough that repeated execution produces results that seem miraculous to the inexperienced. But there is no miracle, only discipline, consistency, and respect for structure. If a man wishes to make a fortune, he must first learn to protect a dollar. Most blow themselves up through reckless leverage and emotional decisions. The hourly chart naturally slows those mistakes. It is difficult to overtrade when you wait for hourly setups. It is difficult to gamble when you insist on confluence. And it is difficult to panic when you see the broader structure. The clarity gives you emotional distance, and that distance is worth thousands of dollars over a lifetime. Yet, despite all its advantages, few traders truly dedicate themselves to mastering the 1-hour chart. It lacks excitement. It lacks constant stimulation. It forces waiting, and waiting feels like loss to the undisciplined. They prefer the illusion of activity to the reality of results. They crave entertainment more than profit. The market punishes them generously. But the trader who remains faithful to the hourly perspective, who trains his eye to see structure and his mind to wait for alignment, begins to experience consistency. He learns to take fewer trades, but better ones. He watches losing streaks shorten and winning streaks deepen. Most importantly, he gains something priceless, the confidence that comes from a system that does not bend to his feelings. When confidence is earned through discipline and not fantasy, a man finds the quiet strength to scale. First, he trades with modest size. Then, with the same discipline, he increases his stake. The conditions are the same, but the rewards multiply. That is how the hourly chart, mastered properly, becomes a tool not just for survival, but for tremendous gain. Most will never reach that point. The path is too restrained, too patient, too slow for their restless minds. They seek shortcuts, thrills, the next big secret. Meanwhile, the methodical trader compounds quietly, following the same plan he has always followed, and in time, it is that man the market rewards. There comes a point in a trader's development when technique matters less than temperament. When the method is proven and the setup familiar, the only thing left to battle is oneself. The 1-hour chart becomes a mirror in this stage. It reflects every flaw in your character. It exposes impatience. It reveals greed. It highlights hesitation. Not because the chart cares, but because it refuses to move at your command. It will not be bullied or hurried. You either match its rhythm or you lose. I learned over years that the market rarely offers more than a handful of high-quality opportunities in a day. sometimes in a week. The fools imagine they can create profit through hustle. I once believed it too. I thought working harder meant trading more often. The market disabused me of that notion. I discovered that effort meant waiting, studying, and filtering, not charging wildly into battle. The 1-hour chart reinforces that idea. It grants a man enough movement to earn handsomely, but only if he confines his action to the moments when advantage is present. Advantage is a word most traders use loosely. They think an advantage is simply a reason to take a trade. In truth, advantage is a condition in which the market tips the scale in your favor, even if only slightly. It is when structure, trend, momentum, and liquidity align. You see it clearly when you know what to look for: a clean break and retest, a rejection of a level the market has respected for days, or the emergence of higher lows that signal pressure building. These are not guesses, they are footprints, evidence. A prosecutor would call it a case file, but even when advantage presents itself, the 1-hour chart demands commitment. You must act with intent, not with hope. The moment you place the trade, you are making a declaration. If I am right, I will profit handsomely. If I am wrong, I will leave quickly and cleanly. The hourly view gives you enough room to let the trade breathe, but not enough to hide your mistakes. 1 or 2 candles will often tell you whether your thesis holds, and that clarity is worth more than any elaborate indicator or algorithm. Many traders cannot tolerate clarity. They prefer ambiguity because it gives them excuses. When the hourly chart shows a level is broken cleanly, there is no justification for clinging to an opposite position. Yet men cling anyway, unwilling to accept the sting of being wrong. They surrender hours, then days, defending a mistake the market exposed in 1 candle. That stubbornness is a luxury only the wealthy can afford, and even they eventually run out of rope. If you respect the 1-hour chart, it will teach you the virtue of immediate accountability. It forces you to accept that being wrong quickly is the price of being right consistently. There is no shame in it. The shame lies in refusing to accept what the price clearly declares. The market does not whisper, it speaks plainly. Most ears are too full of ego to hear it. Once a trader internalizes this, the money begins to come steadily, not by accident, but by design. 1 good trade a day, repeated throughout the year, can build a fortune larger than anything the amateur gambler imagines while firing off dozens of reckless orders. Consistency is not magic. It is mathematics meeting discipline. The 1-hour chart sits at the intersection of those 2 forces. The mathematics is simple. Higher time frames hold stronger levels. Stronger levels yield stronger reactions. Strong reactions create measured opportunities. And measured opportunities, executed repeatedly with discipline, produce large returns through the compounding of method and capital. A trader who understands this stops dreaming of jackpots. He stops acting like the casino patron. He becomes the casino owner, content to win small edges over and over, knowing the law of numbers favors him in the long run. But powering this machine is discipline, the kind that withstands temptation. A man must resist the urge to enlarge his position size simply because he feels confident. He must resist the impulse to widen his stop because he feels unlucky. He must resist the craving to trade simply because time is passing. And all these temptations come daily, even for seasoned traders. The 1-hour chart offers just enough space between trades for doubt and boredom to creep in. It is precisely that space where most accounts die. If a trader survives that psychological desert, he gains mastery most never touch. He learns that the market will pay him only when it has something to offer, not when he demands payment. He learns the rhythm of the hourly bars. When momentum carries the trend cleanly, when the pullback is a gift, and when it is a trap, when the consolidation is preparing for a breakout, and when it is nothing more than exhaustion. He becomes fluent in the language of structure. Fluency is not the ability to read every candle, but the ability to ignore most of them, to understand the meaning of a movement without obsessing over every tick. When that fluency comes, the trader no longer feels rushed. He knows the market will reveal opportunity today, tomorrow, or the next day. The anxiety of missing out disappears. He no longer chases because he knows chasing is unnecessary. The market moves in cycles. The patient trader eats every cycle. The frantic trader burns himself out during one. Some believe the 1 hour chart is too slow to make millions. They are blinded by television fantasies of wealth earned within minutes. They forget that compounding needs repetition and survival more than it needs speed. A man who earns 2% a week through disciplined hourly entries will outperform the reckless genius who doubles his account 1 month and evaporates it the next. Millionaires are not built by extraordinary days. They are built by ordinary days executed extraordinarily well. Once a trader finds consistency, scaling becomes straightforward mathematically, not emotionally. The market does not care whether you trade 1 lot or 10. The only difference lies within the trader. If he has truly earned discipline, he can size up without changing his behavior. If he has not, size will expose his weaknesses brutally. That is why mastery of structure must precede ambition. Men who attempt to scale before they are ready often return to zero with remarkable speed. The 1 hour chart is a proving ground for that mastery. It is slow enough that emotion can be recognized and controlled, yet fast enough to teach consequences quickly. A trader who learns to execute flawlessly on this time frame becomes a formidable participant on every other. The principles do not change, only the expression of movement. Once a man learns to see the market in terms of waves, breaks, retests, and momentum shifts, he can apply that understanding anywhere. But the hourly chart trains his eye without overwhelming his nerve. And in time, something remarkable happens. The trader begins to trust himself not because he believes he is special, but because he has evidence. He has charts filled with well-executed trades. He has memories of resisting temptation. He has scars from mistakes corrected, and he carries them as reminders, not burdens. This trust is not arrogance. It is a quiet confidence that allows effort without panic. When he enters a trade, he does so fully. When he exits, he does so decisively. Doubt remains, but doubt becomes an advisor rather than a tyrant. There is an old truth whispered among traders but rarely understood. The market rewards the man who needs nothing from it. When a trader becomes desperate for profit, he chases and presses and bends rules until they break. But when he approaches with calm, as if profit is merely a byproduct of discipline, the market often yields more than he expected. The 1 hour chart fosters that detachment. It distances the trader from the frantic urge to win now and teaches him that winning eventually is far more valuable. In that way, mastery becomes less about technique and more about identity. A man becomes consistent not because he found the best strategy, but because he became the kind of trader who follows his rules regardless of emotion. The hourly chart is the forge that tempers that steel. It burns away fantasy through repetition, pressure, and consequence. And when the steel hardens, the trader discovers there is no ceiling to what he can earn, only limits he imposes on himself. $1 million accounts are not created by brilliance. They are created by the compounding of simple edges over long periods of time, and the 1 hour chart provides fertile ground for that growth. When embraced fully, it becomes less a tool and more a philosophy. Trade only when the market offers clarity, risk little, allow winners the room to expand, and remain patient during droughts. The market does not owe a man opportunity, but it will eventually offer it, and when it does, the trader who has prepared will seize it effortlessly. Most will never understand this. They will continue to chase the lower time frames, hypnotized by motion and blind to meaning. They will burn through accounts, convinced the answers must be complex. Meanwhile, the man who studies the hourly chart, applying simple rules with unwavering resolve, will accumulate capital quietly and confidently. Over months and years, he will build what others merely daydream about. And one day, that trader will look back and realize the truth. The market did not make him wealthy. Discipline did. The chart did not reveal secrets. It revealed his own weaknesses. And when he conquered those, profit became a natural consequence, not a desperate pursuit. That is how fortunes are built, not in a frenzy, but in structure, not through luck, but through consistency. And in that hour, candle by candle, conviction grows, capital compounds, and a trader becomes what most pretend to be someone who takes from the market not because he gambles, but because he has earned the right to win.